Welcome one, welcome all to DeFi Crypto and Airdrops Monday Talks edition. We go live every Monday, 10 a.m. Pacific Standard Time. And what would that be? 1 o'clock Eastern. And on this show, we just got done talking with David on our daily DeFi entry level, just kind of educational show. But on this one, we have our guest, as always, Taylor, and hopefully Jeff, his business partner, will show up. Taylor is, for our arena audience, Taylor is a practicing estate attorney that does wills, trusts, small business formation, and things like that the wealthy use to protect their wealth. So a lot of us in crypto, a lot of us investing, dream of making a bunch of money and getting rich. But what are your plans after? You know, it's like, once you have that money, you're just going to go out and blow it on Lamborghinis and mansions and girls and, whatever. Or
yes.
Yes. The answer is yes, but you want to do it responsibly. So that's what this show is about: is how to mitigate your tax burdens, how to put your wealth into vehicles that is going to protect it, so that you have it for that life changing or that generational wealth that everyone talks about. So let's go ahead and jump on into this. So I kind of want to talk about a couple different topics. I'm going to let you guys choose. So the topics that I would really like to talk about would be kind of what's going on macro right now. So you have Trump that's threatened Germany with some new some new tariffs. You have Greenland in play. You have gold and silver pumping to new all-time highs. You have Bitcoin took a dump last night. Take your pick, gentlemen. What do we want to start with?
David, why don't you lead the way? What do you want to go over first?
Yeah,
I will be right back.
So if I'm honest, there was something that I wanted to ask you about, Taylor. I've got a client of mine, a high net worth guy, and he was telling me last night about a strategy to protect wealth by using charities, where I didn't quite understand the strategy all that well. It sounded to me like you donate to a charity that you own, and then you are able to borrow 99% against it in some way. I didn't quite understand it, but I'm sure that you probably know a hell of a lot more about it than I do. What do you think about that?
Yeah, so there are strategies that you use charities as a mechanism to protect wealth for the future. Now, generally, I have to explain to clients a lot of the stuff that's pushed online is, it's basically illegal what people are trying to say that they're doing. However, charities are, you're allowed to give money to charity, but not right now, but in the future, over time, as long as you're giving a certain percentage of it every year, or sometimes it can be done after you pass away. You're allowed to take you can take income deductions off of those charitable gifts that you're giving into your foundations. Now, the ultimate goal of why the IRS allows it, of course, is that it will be used for charitable purposes. That's the ultimate kind of idea. And I've never heard of anybody being able to loan against it. However, maybe some attorneys have figured out some kind of strategies of how you can still claim it as an asset and take loans against it. I imagine when you get to there are, just like anything, there are attorneys that have special kind of things that they have gone to the IRS, they've got it approved, and they know how to do it. I don't.
Oh, like special products that they.
Yeah, just like anything, as long as you get it. If you're going to get, if any attorney's pitching you an idea, well, one, if it's an attorney pitching you an idea, hopefully it's been vetted. But what you want to see is that it's been confirmed as legitimate practice by the IRS. That's all. And so they should have. I can't remember the name of it, but they submit it to the IRS. The IRS says, yes, we'll allow this, or no, we will not. Now, I have to explain to a lot of people that, hey, those kind of strategies, yes, are really good for very wealthy people because they can afford the setup costs and, maintaining it each year, because just like anything, the IRS used to look into things. Now it looks like they're not really looking into very many charities and different things like that. So,
judging just, nothing in particular, no, don't want to point out anything specific, daycares.
Yeah.
Fire aid.
Yeah. Fires, just,
Mhm.
yeah. Money just seems like it just magically disappears.
Yeah. And so it's always be careful if anything sounds a little too good to be true. But however, there are strategies out there that, I have, gone to some, CLEs, and the attorneys presenting them have had them vetted, and I just direct people. I'll go, hey, here, I'll set up this stuff. But if you want to do this idea, this is somebody that does this idea. But a lot of times the cost setup for those kind of things, you have to be doing tens of millions of dollars to make it worth it.
Right.
So
but yeah, there are some really creative ideas out there that people have come up with ways to preserve wealth for multiple generations, and charities are one of them.
So the chat over in the arena is a little unhinged. MI says, just put it into a weed farm. Money grows on trees, son.
Yeah. Yeah. So there's a lot of cool kind of ideas like that, but those are, the ultra wealthy can do a lot of things that, a lot of us can't, but
there's a huge barrier to entry. I mean, one thing I would like to point out about, some of this stuff that Taylor's talking about is, some of these vehicles, you have to be an accredited investor. So basically you have to be wealthy before you can take advantage of a lot of these opportunities to get more wealthy, which is kind of bullshit in my opinion, but continue.
Yeah. Jeff, who's going to jump off here. I mean, he's involved with 2 hedge funds right now, and it's sad because most of our clients, he can't even mention it to them.
Legally.
Legally, we can't say anything like, hey, we have this other thing that we do for our wealthy clients, but we can't even mention it to them.
Would it be a loophole if you started a fund that got accredited that smaller investors could invest in, and then that invested in it?
Well, that's what Kevin Perkins.
Yeah, that I interviewed.
Yeah, that's why they're trying to get their litigation financing fund turned into crypto.
Gotcha.
So they can start approaching everybody with it and being like, hey, you can own this law firm that invests in big litigation cases. Right now, we can only pitch it to wealthy people, but if we can get it done through crypto, anybody can just buy the crypto that then funds the cases.
So that actually should be launching soon. So those that don't know, I interviewed Kevin on about a month or 2 ago, and what he's been working with Taylor and Jeff on is tokenizing, real world asset tokenization. They're trying to tokenize a legal fund. So historically, most lawsuits are settled out of court, especially if the not the plaintiff, but the what's the other one?
Defendant?
Yeah, the defendant. If the defendant is like, say, a large pharmaceutical company, they have massive amounts of money and lawyers where they can just grind you down in court and basically just beat you by just making you run out of money, so you can't fight anymore. So what this fund does, it allows people to invest in a fund that would fund the lawyers to be able to fight for the long term these huge lawsuits, malpractice or whatever lawsuits, and then as an investor, as these pay out, you earn a yield, and so you actually own part of the law firm. I thought it was super interesting. I know it's kind of doesn't sound interesting, but it's a great way to where you could potentially earn income over time. So the stuff that they're doing with tokenized assets is just insane to me. But David, what's some of your thoughts on that?
Well, I think that everything is going to become tokenized over time. And we're starting to see that with, basic RWAs like US treasuries. We're seeing that with many commodities becoming tokenized. The challenge is that I don't think these big institutions really know what's legal and what's not yet, because we don't have that Clarity Act. and the Senate didn't vote on it last week. So I'm looking forward to getting real, true regulatory clarity, because then I think the floodgates are going to open. Look, if Wall Street and institutions can make money selling these financial products, they're going to. And so I can't wait for there to be, tokenized everything that you can just hold in your DeFi wallet. I think that will be revolutionary. But I want to ask Taylor a question about a specific system for protecting wealth that I've been pitched on. It's really interesting here. It uses a combination of a revocable living trust and an LLC taxed as an S corp and another LLC. Use these three together. So with the trust, that's kind of like the bucket that holds everything. It replaces you personally as the owner of your companies. And then the first S corp, that is your operations company. That's for your active income. It's where you run your business, you sell your goods and services. That generates your ordinary income, right? And then the third S corp, or really the second S corp here, that is like your holding company. And that owns your like safe wealth, or like your rental real estate or brokerage accounts, stuff like that. And so by using these three together, your business generates cash, you pay yourself a salary, you take profits, but you're somehow able to, I guess, mitigate your tax liability by using this series of three different products. You've got, the trust, the revocable trust, and then the two S corps. Does that ring a bell for you, Taylor? Does that make any sense, what I just said?
Yes. And so particularly back before I forgot the recent law change that we had, but using the S corp as to take your income through was a big way to decrease some taxes. We've lost some of that ability. It isn't as attractive as it was before, because back in the day, as long as your salary was reasonable, you could set your salary. Well, if you're kind of aware of taxation of your income, you basically, your income is double taxed. You first have to pay your employment tax, and then you pay your income tax. And so, I use this strategy for a long time, and the strategy is as well, as long as my salary is reasonable to what I should be making, I had to up my salary. I could claim a certain amount of salary and only pay my employment tax, which effectively is like 15.3% when you add in everything. And then I could take distributions on the upper part. So, the first year I started my law firm, I came out of law school, it didn't have any money. So I was able to set my salary around $20,000. And then even though I kind of didn't make any money my first year, I made negative money my first year after I took out all the loans. But as the years went on, I slowly had to up it to a point where it didn't become that reasonable. What people need to understand is, under the tax law, we give a lot of benefit to small business owners because you are driving the economy. And so when you're able to have, you have your revocable living trust as a thing that manages as the owner of everything. We do that setup because, well, what if you become disabled? What if you pass away? Different things like that. But the businesses, you're able to write off a lot of things if you run your business correctly, because anything that's a reasonable business expense, well, you can put it under your business. And so there's a lot of strategies that are used. And yes, it will save you a lot in taxes, but you have to be a small business owner. Like, that's the key. Is if you're not a small business owner, you're a W-2 employee, well, the S corp strategy doesn't work. And so, but that, yes, it's a legitimate strategy. It used to be a lot better than it is today. Jeff, the S corp strategy, what was the rule change that doesn't make it as attractive right now? I forgot what it was.
Are you talking about so that you can take distributions instead of salary to avoid your Social Security?
Well,
yeah.
Real quick, let me introduce Jeff on the arena. Those of you that are just joining us, Jeff. And again, correct me if I'm wrong, licensed financial advisor?
Certified financial planner.
Certified financial planner. Basically,
yes.
the investor version of a lawyer.
Yeah, or a CF, or maybe I am to financial services and investing what a CPA is to accounting. It's just a very broad, highly regulated license.
So you know your shit is what you're saying.
I know enough to know what I don't know.
All right, perfect. You're in the right place.
Somewhere.
Let's do this. All right.
So to answer, as far as the rule, if I think it's what you're talking about, it's not that there's been a rule change. It's just they've gotten more stringent upon enforcing it. So basically, you have to pay yourself what's considered a reasonable salary. So let's say, for example, you're moonlighting as a doctor. No, you are a doctor that moonlights. That works better. If you're moonlighting as a doctor, you're going to get arrested for fraud. So if you're a doctor that moonlights, you can't sit there and be like, oh, well, I'm going to pay myself a rate of $12 an hour because they're going to benchmark it and be like, well, you actually make, you should be paying yourself this much. And so the reason being is they understand that people can choose to pay themselves a salary that is de minimis, and then take the extra compensation as basically a dividend, or what's actually called a distribution, that skips the payroll tax. And so the payroll tax, if you're an individual that's employed, is basically approximately 6.26% or 6.7%. It comes to be 13.26% of your paycheck. If you're a self-employed, comes out, it's half of that if you're employed, right? So if you're a self-employed person, that's a really big tax hit, all the way up to like 170,000 and change. The danger of this, though, is, and I see this all the time, and we can get into whether Social Security gonna be around and should we keep it and all sort of stuff. But the danger is there's a lot of people that optimize for taxes while they were working, and so they did this strategy, which again can be super impactful. So let's say you got a guy that is making $200,000 a year in his business. After expenses, he's making $150,000 in compensation, and he pays himself $50,000 because if he worked for somebody else, he'd make $50,000, $60,000, $70,000. So he's like, okay, that's reasonable. Well, you're only then paying payroll taxes on that $50,000. So when you get to retirement, you get a Social Security payout as if all you made was $50,000, right? So in the short to intermediate term, it's great because you saved, in that example, you saved about 13 grand. Right? If you didn't pay taxes on 150 grand, you only pay taxes on 50 grand when it comes to your payroll taxes, and you're paying 13-14% on that number, you're saving 14,000 a year. And if you invest that money for your future, you're way ahead of the game. But what most people do?
And that's a lot of hookers and blow. 13 grand is a lot of hookers and blow.
Spend it on hookers and blow, then you get to retirement and you go to get your Social Security check, and all of a sudden you're like, what the hell? Why is my check like $1,600 a month? Well, because you only paid in a third compared to what you should have. So if people do this, they need to have the discipline to make an investment plan that is going to make up for this gap they are now creating. Now, that's assuming we take the government at face value, which I'm sure all four of us on here do, and know that nothing's ever going to change and it's not going to go to shit. But you should at least, you owe it to yourself to calculate out, or call somebody like me and find out, okay, well, if I do it the old-fashioned way, I'm going to pay a lot in, and theoretically this will be my benefit, versus if I optimize for taxes now, I am now putting that burden back on my own shoulders to provide for my retirement. What percentage of this do I need to put away for the future, right? That's my only sort of caveat to that. But otherwise, it's great because payroll taxes suck. That's official.
So can you write off the hookers and blow? I wonder.
As long as it's a reasonable business expense.
If I'm talking to them about DeFi, while we're doing blow and and the other activities,
you meet them at a crypto conference.
Is that a meeting? Is that considered a business meeting?
Purposes.
There we go.
Yeah. So there's no. This is the disclaimer: is there's no hooker or blow discount or tax rule. Please consult your own tax advisor. So
we're living with tyranny. We're living in tyranny.
Because there's guys out there going, dude, that is absolutely an expense. All right, that is an entertainment expense.
Life hack.
Anyway, so what? I apologize for joining late, gentlemen. What are we talking about today?
So, I mean, if we can bounce over, and just kind of talk about some of the macro. I mean, silver and gold is, all-time highs. I mean, silver's like at $93, $94 an ounce. Gold's at all-time highs.
January.
Trump is invading Greenland. Germany sent like 8 troops to fight the U.S. to protect Greenland. I think a couple other countries sent maybe a dozen or so. So there's like 3 dozen European troops there to protect Greenland against the U.S.
Oh, that's
Yeah, that's I will at this point. I do wonder, separate from the politics of it, good, bad, or indifferent. Part of me is like, it's called the booty write-off. That's funny. I want to know what I think we'll all be surprised when Trump does something that it actually like wakes up, like pisses off the Congress, like to where something happens. Like, what's that line? Because it's no longer threatening peaceful nations or kidnapping other folks, or again, you might even be for it. But it's just still, even if it's something you think is the right thing to do, it's still unprecedented compared to really anything we've ever experienced. Mm-hmm. The way that he just, like he wrote that letter saying peace is no longer his only concern. Just like, wow.
Trump is unhinged, man.
Right. And he just, I can't imagine what it must be like to be his chief of staff. Like wakes up every morning and goes, "This is meaningless to me."
To be in his cabinet and just be running around putting out all the fires that he starts. Can you imagine? You're running around with a fire extinguisher and fire boots on, and you're just stomping and spraying and making phone calls and apologizing. And I can only imagine.
I don't know, man. When I look at Western Europe and the governments running those countries, they start to look less like solid allies to me, if I'm being completely honest. They look like they're going from socialism to like some type of authoritarian communism, like especially in Britain. Like how many 13,000 people arrested for tweets? I don't know, man. Look, I'm all for what Trump is doing in Greenland. Because when you look at the Arctic Circle, like I was on a flight from, San Francisco to Florida just 2 days ago. And so on the plane, I'm looking at the map of the world, right? I did not realize that Greenland was so strategically important. So, hey, if he
it is certainly strategically important, right? But I by the way, no idea when my camera's off. No clue. It just happens. So it's on. I'm staring at the lights on, but I'm not clearly. I'm looking at you guys.
Jeff is here under anonymity because
it's like, have you guys ever seen? This is absolutely horrible, dark humor, no pun intended. But someone, I think it's Twitter, it might be Instagram, and someone's just like Helen Keller's Instagram. It'll be like a black. It'll just be like a completely blank black screen. It'll be like, what a beautiful horrible, right? Or it'll be like, can you believe these kittens? They're so cute. And it's just every single post is a black screen, guys. It's funny. So anyway, I digress. Here's what I would agree with you. Greenland's incredibly strategically important, but it is my understanding, and maybe I'm wrong, it is my understanding that we have since like 1951 a security agreement with them anyway, which is why we have bases up there. We're the allowed
early missiles.
So we're allowed to defend it as it is. Like, it's not like it's just this Wild West no man's land.
Is there oil there or natural resources?
There's rare earth minerals there.
Yeah, there's a lot of minerals there. There's also the giant spaceship that's underneath the ice that came out.
I'm glad you brought that up. I'm glad you brought that up because that's important because the technology that it offers.
Yeah, so apparently it's it can generate weather or something. I don't know. I've heard a lot of conspiracy theories, but I'm more interested in that in that line of thinking as we want the technology from the giant spaceship that was found.
Well, and Hollow Earth. There's Hollow Earth as well. There you go. There's your camera.
Different.
So those that don't understand what they're talking about strategic importance is Greenland. It's whenever you're flying from the U.S. to Europe, usually you go straight over the pole. And I won't get into the exact reasons why, but basically it's faster.
I thought the Earth was flat, Mike. Isn't
exactly. If the Earth's flat, it makes sense.
Yes. So, but Greenland is really one of the few populated areas, above the Arctic Circle. And if you look, it's the majority of the landmass. And so,
I thought the majority was just frozen tundra, and all the populations is on the edge, kind of like how Canada just hangs out right.
Oh yeah, no, absolutely. But there is an established population up there, whereas in a lot of these places, there really isn't. And so when it comes to occupying, the top of the globe, the North Pole, Greenland has great strategic importance. A lot of the Russian Navy, a lot of the U.S. Navy and stuff like that, they patrol up there, for that reason. And, if you look at Europe, you have Russia over here. They have all of their, Arctic ports up here. And, so they're always patrolling up around here and, going down the eastern seaboard of the U.S. And then you have the U.S. that wants this as a buffer. So, of course, you have Russia over on this side where you have Alaska.
I know, we're not going to have Russia as neighbors. I'm like, dude, we literally have Russia as a neighbor.
Have you seen that video with the guy yelling? He's like, "Hey, F you," and he's like, "What's your name?" And it's like, "I'm Stan." He's like, "Well, F you, Stan." And he's like, "What's your name?" That's basically what's going on up there with Russia and the U.S.
Remember Sarah Palin saying that I can see Russia from my backyard?
Yeah, it's a thing. I mean, the Bering Strait is not that
it's like much of a distance. 57 miles, something like that. So I guess
it's the same thing as being at Key West. On a clear day, you can see Cuba, and it's about the same distance.
Huh. So I do think with this whole security argument. I mean, let me say it this way, David. I agree with this. I think the best argument for any position on the right now is looking at Britain, right? And I think it really sucks for guys like me that are very much in kind of in the middle. They're just sort of dissatisfied with everything, which I realize is a milquetoast easy position. But I really I don't want to be Britain, right? I don't want people to get arrested for Facebook posts or for protest, none of that. But I'm not real thrilled about what's going on in Minneapolis, or I'm not so happy about the fact that it seems like we're just arbitrarily deciding that now we need to have Greenland. And I don't think we should be saying things like, well, we're going to have it one way or the other. I think the saber rattling can get us a place we don't necessarily want to go. I certainly don't know Americans that are willing to die for Greenland right now, right?
Oh, I very much doubt that it comes to that.
I'm just saying that I think that there's this. I think we've abandoned across the Western world. It feels like we've abandoned governance to either a more far right position or a ultra woke position. And I don't understand what happened to the middle. What happened to just like regular people are like, I want to go to work. I want to go home. I want to have 4th of July fireworks, and I want to go see the ball game, and I don't want anybody to mess with me. And I want us to be safe, secure, and have economic prosperity, and otherwise do what you want to do.
Yeah.
Where's that? And I don't get it.
Greenland's a simple answer, and it's a reason why we went into Venezuela. It is we are trying to control resources. That is the big problem that's happening right now, is the fear that if we do fractionalize, we no longer have a global system. Well, you need access to certain minerals and materials. And if America can't get access to those, we have serious problems. And so I think more than anything, that's what you see Trump doing. What Trump's doing is he's told by his inner circle, we have serious problems coming. We got to get certain things. We have to have control of certain assets. And, while yes, Greenland is strategic, if we ever get into a real war with China or Russia, nothing matters because people are just going to launch nukes. And so,
and there's your good feeling comment of the day.
It's all about is what's the real war that's coming right now is economic war.
I personally don't think that nukes are, by superpowers is ever really going to be a thing. I would think that if nukes were used, it would be a high altitude burst to where the EMP would, not do any damage and, take out the infrastructure, take out the power grid, because then it would make a land invasion a lot easier for, because nobody wants to start a nuclear war. If we launch nukes, against somebody else, Russia or China, they're going to launch theirs. It's mutually destructive. So
Yeah.
it's a stalemate. But I think Taylor's right. I think that the warfare that's being waged right now is an economic one, with tariffs, with, just, different levers like that. You see China quite a bit, where they talk about going after Taiwan because of chip manufacturing. Then they kind of backed off of that because they've reverse engineered how to make the chips themselves. They went into Afghanistan when we pulled out. They've gone into Africa, invested in their infrastructure for mineral rights, for rare earth minerals. So you're seeing like this tech rush. China, they're outpacing us as far as power generation. They've gone parabolic with building dams and solar and just whatever, so that they have the infrastructure to continue to grow and scale, whereas the U.S. hasn't. So I think that is the new arms race, is the economies and the technology. What do you think, David?
I really think that if it's an economic war, that there's probably quite a bit more upside left in gold and silver and other commodities. If you price silver if you take into account inflation, and so you just price silver in USM2, it looks like there's probably another 30% to the upside before you actually start to hit an important level of resistance. So could we see, maybe $130 silver in the near term? I think that could be likely. And gold, that big psychological level of resistance at 5K, hey, I bet that gets tested pretty soon. But what's interesting to me, though, is that other commodities have not been participating in the rally. You take a look at like wheat and corn and soybeans, nothing. So is there an opportunity to get long those commodities that have underperformed? You also see the same thing for oil. With oil is not rallying. So the economic war part, I just expect the dollar to lose value. But here's the thing, though. If we need to borrow another $500 billion a year to fund this expansion of the military, from what, $1 trillion to $1.5 trillion a year, that additional borrowing, I think, is going to push long-term rates up. So, look, the Fed can control the front of the curve, but they can't do anything about the back of the curve. Well, they can if they institute some type of yield curve control. But when I look at bonds and notes, it looks like we're starting to see rates break out. And so if rates really start to push higher, I think that could actually lead to a US dollar rally. And so if the dollar starts to really rally, well, then that might put a dampener on that gold and silver and commodity rally a little bit. So, the economic war, man, it's complex. It really is. But what do you think is the most important single item to watch? If it were me, I think it's rates. I think that's probably the most important thing.
I completely agree with everything Dave just said, which I think is why it's a much more nuanced. We have a lot of different paths that we could go on to from here, right? And it's so like in The Princess Bride, right? That scene where it's like
inconceivable.
Yeah, and he's like, I know that you know that I know that you know that I know.
Yeah,
we're talking third, fourth, fifth order effects here, and it just depends on which large market movers take which positions at which times. That will kind of like a plinko ball will decide kind of where we end on this. But I do agree with David that weirdly we actually need the dollar for everything to work out okay. We need the dollar to strengthen, and the reason why is right now one of the biggest challenges we have, besides the geopolitical, we'll call it personality animus between a lot of people that buy our treasuries and our current administration. Mm-hmm. There is a real, like, to me, the biggest thing that's happened in the last year, believe it or not, economically, was not tariffs. It's the failure of Doge to be implemented at a congressional level. Mm-hmm. And here's why, because if I am a creditor of the United States, right?
Well, real quick, for those that don't know, Doge was basically Elon Musk was heading it when Trump first got into office, and they were sniffing out, kind of the waste and abuse and fraud of our tax dollars to try to streamline because, of our massive debt. They're trying to reverse that. But even with everything that they found, what Jeff is talking about is they never did anything. It takes Congress; they control the purse strings, and nothing was ever enacted to actually eliminate that fraud, that waste, that abuse. So go ahead, Jeff. Sorry.
Well, yeah, and not just fraud, waste, and abuse. I mean, yes, that's obviously super important.
Yeah.
But also just a general tightening of the belt. Because if you go to the military, they're always gonna be like, well, I got this cool toy I could build if you give me a little more. I just need a couple $100 billion more, and I could do this too. And if you go to the department, well, I guess you go to any department in the executive branch, and all of them are going to have their wish list of why they need more, right? Mm-hmm. And so what I'm really concerned about is if you break down these sovereign wealth funds and these nation states and the people that are the marginal buyer of longer term rates, which is what he's talking about, why would you want to give us money when we have demonstrated, at least in my lifetime, we have never had this much political will going into an election season to cut? Like literally, I really believe if Trump had gone in or the Congress said, hey, we're cutting everything by 5%. We're cutting the military by 5%. We're cutting Social Security by 5%. We're cutting welfare by 5%. We're cutting, everybody needs to tighten the damn belt. I think that would have been a really good measure of our seriousness. But instead, you had in the campaign trail the last month, remember, Elon was coming out with Trump. And I'm not saying, by the way, this is a congressional both sides problem. It's not a Trump problem. This is everyone's leadership problem. Yeah. But Elon's like, we can cut $1 trillion, $2 trillion. I think last time I checked, they identified like 300 or 400 billion, and they cut like 30 billion, not actually codified, like that's actually been stopped, right? Yeah. And so I'm gonna go. You want me to give you my money as let's say I'm some Western European nation, right? Yeah. So I got to convert my currency, the euro, into dollars. You want me to get 4% for the privilege. And by the way, you're losing 10% a year against my currency, and you want to give me back. So I'm going to make 4, but I'm going to lose 10. So I'm going to lose 6% for the privilege of basically keeping America happy. And at the same time, you're telling me you don't actually want to be in NATO and this and that and the other. Like we need to be a reserve currency. We are the reserve currency.
It's a net negative investment, basically.
They have to do something. But I think to Dave's point, they're going to want more compensation for risk because we just had a huge litmus test at a leadership level across party of, are you going to get your financial house in order? And we basically went, nah.
Jeff, you're absolutely right, man. The profligacy needs to stop. Like this fiscal dominance, eventually it will blow up the entire U.S. Treasury system. If we don't get these deficits under control, like ask yourself, why in the world do we still have this massive deficit? It's like COVID level deficit spending still. It's like this is war level deficit spending. For what purpose? It doesn't make any sense. Eventually, this is a death spiral. It will lead to the end of the US dollar as the world reserve currency if we don't do something now. Like we don't have, I think that's probably why Elon had his first falling out with Trump, hopefully only falling out with Trump. I think it was over the lack of political will to actually cut, to actually codify the cuts, to actually get serious about it. It's like, look, if we just eliminate the fraud, that could cut, what, 10% off the top? That's what it seems like. So that would be great. But why do we need to be spending, at such a large deficit? Why does that need to still be a thing? I don't get it. Like, it doesn't make any sense. Like, these people in Washington seem to not understand some basic economics here, because this will lead to the destruction of the dollar eventually. It's like, we can't wait any longer. We've got to be able to take action. Why is there no will to take action? Are we going to have to wait until something horrible happens?
Do you want me to actually answer that? Because they're all in it together.
It's the uni party, right? Like they were
talking
about the comments.
They each have their pet projects. They each have their people they're paying off that fund their campaigns. On the right, it's usually the military industrial complex, because most of them have stock and things like that in those companies. And then on the left, they have all these NGOs. They with the daycares in Minnesota. They give tax dollars to these organizations, these non-government organizations, who divvy it out and do all these things that they're doing, basically fraud. And then those people make donations to those politicians. So it's really, in my opinion, it's a money laundering scheme where it's a way that they found to launder our tax dollars back to make them and their buddies and the people that keep them in power, rich.
So,
You know,
Mike, they say that complex systems fail slowly and then all at once. And so I think to myself, like, okay, what would be a good indicator for like something's really, really broken? I think it's got to be rates, because the buyer at the margin of US Treasuries now is probably the Fed, or they're buying bills at the front end. But then you've also got the Cayman whale.
We're buying our own debt.
Yeah, exactly. So we've got, the Cayman whale, which is just like a conglomeration of hedge funds in the Cayman Islands. They're just running a big basis trade with massive leverage. So those guys are not price sensitive on entry, but they are very sensitive to volatility. So if there starts to be like real bond market vol, those guys will step away, because they don't actually put up much, if any, collateral. They just get like extended lines of credit from banks to go out and buy treasuries and then put them up in repo, borrow against them overnight so that they can get short futures against them. So because they're using so much leverage, if there is bond market volatility, they've got to step away. So I think that quickly, exactly right. And so I'm thinking to myself, like, well, if we start to see rates shoot higher, that's probably a good indication that maybe people in Europe are starting to dump treasuries. Maybe the Japanese are being forced to dump treasuries to support the yen. And all of those things would put upside pressure on rates. So I think probably if you want a barometer for the health of the US Treasury system, watch bond market vol. So I'm watching the MOVE index. I watch that pretty closely. But you could also just watch, yields on the 10-year, yields on the 30-year. And when you look around the world a little bit and you look specifically at Japan, that's an interesting trade. Getting long the yen, it would be a depreciation of the yen against the dollar. The yen's what, like 170 today, something like that? Maybe not quite 170, 158. But a push a little bit higher above 162. And you guys, if you zoom out on that chart of USD JPY, you look at it on a monthly from 1970 to today, that is a really interesting level right around like 162, because a breakout above 162 in the yen. And I think the Japanese are going to have to start dumping treasuries more aggressively to support the yen, because it would go straight to 200, like in a hurry. So I think the thing to watch for like the health of the US Treasury system, not even the economy in the United States, just the Treasury system, which is basically like horrible tokenomics. Like if the US Treasury system was a DeFi protocol, I would run in the opposite direction. It's the worst incentive system ever. But I think rates pushing higher is not good. And it's not even that they're pushing higher, it's the speed and the magnitude of the move. So yeah, I think that we might actually be in hot water, but like a frog, if the temperature gets turned up slowly, you don't really notice it until it's too late. So what the hell do we do? We've got to cut the deficit spending. Like this is a solvable problem. Like there are fixes.
So, but here's the challenge. So first of all, you should have Dave on all the time. You don't even need me. You just need Dave. Dude, someone made a comment that he's the most even keeled guy ever. And I was thinking, like, when I was listening to him talk, I'm like, man, I hope when that national broadcast emergency thing finally comes across, it's just like, hey, guys. Look, you've got about.
So there's no food at the grocery store, guys. But
you got about 20 minutes to hug your family because you're going to die.
Right, and he doesn't even like tell you good news. He's like, "There's nothing you can do. You're gonna die now. But if I were you, I don't know. I'd probably do something I like for the next 20 minutes anyway." So that being said, I do think that one of the challenges, what you just said, I 100% agree with. I think it was fantastic analysis, and I agree that the deficit cutting is but the problem is for the vast majority of Americans who are going to be the loudest and get pissiest when we start cutting things. That means, oh, this factory gets closed down, or this benefit is cut, or whatever. They don't have the economic wherewithal and the perspective and the education to understand how these disparate, not that I'm not saying that I do either, but I at least am well versed enough to understand that these are related levers. The average American has no clue what is happening in Japan, much less the yen, much less the fact that the Japanese government bonds are going through the yields spiking through the roof at unprecedented levels and rates. They don't know what that means, and they don't know what a carry trade is. And so,
well, and they don't understand that relationship with the U.S. dollar or U.S. Treasuries or any of that.
Like, they don't understand what it means when you say things like, I mean, I think probably the people who are watching you understand, but when you say things like dump treasuries to support the yen, the challenge becomes, how do you do the right thing when the right thing is going to cause short to intermediate term pain to the American populace by cutting benefits, by cutting subsidies, by maybe raising taxes in a certain area, maybe whatever you're doing to get the financial house in order. It's so disconnected from the reasons that we should, that I think it's very difficult politically to get that, to make that a win. And honestly, this is what I'm really kind of disappointed the most about in Trump. Not, believe it or not, it's not his behavior. It's that, dude, you're coming in theoretically as your last term. This is the time when you go, I don't care about politics anymore. I'm going to do things for legacy. I'm going to do things for the country. I'm going to do things to get things done. And I just, some people can argue that he is.
But Jeff, they tried to kill him twice.
I understand that, but you would think that would, you come in and be like, you would think that would result in a F you, we're doing this, and I'm going to get rid of every cabinet member that can't cut their budget by 10% by next year.
Yeah.
And then, you know what I mean? And I just don't, I feel like that uniparty thing is still so strong that until something happens, to your point, that is so undeniably bad, whatever that might be, maybe another 9/11 or worse.
It would be the stock market rolling over and being down like 10% in a week because rates spiked. That could do it.
Yeah, it needs to be something where people go, what's wrong? Because I do think we are wrongly or naively using the S&P 500 as a proxy for, are we okay? And I don't think that's wise, right?
Yeah, well, I mean, this week, the gap down in the S&P and S&P futures this week to start the week. Look, gaps tend to fill, but the gap down plus yields on the 10-year breaking out above 4.2. I mean, hey, it's starting to look like, well, maybe the top is in for a little bit for the S&P, for the NASDAQ, for the Russell, for the Dow. And if rates continue to push higher, I would kind of expect there to be more downside out of markets, but we're just not seeing vol pick up all that much. If I take a look at VX, volatility futures, sitting at 19.4, still below 20. If I take a look at the VIX, which is just simply the calculation, you can't really trade it. You can trade options on it, but you can't trade it directly. That's why you've got to trade the volatility futures. If I look at the VIX, it's sitting at 18.83, and the S&P is a stone's throw from all-time highs. So there still isn't real fear at all. In fact, I would say that we are still very complacent. So what's it going to take? What's it going to take for people to wake up and stop spending money that we don't have? When I take a look at the entitlement programs, like I did some research on the entitlement programs in California, and the budget, HHS's budget in California, is like over $300 billion a year. It's like $307 billion a year. You guys know how much of that money is actually from the federal taxpayer? $175 billion a year. So ask yourself, why in the world should Bob in Louisiana be forced to subsidize free healthcare for people at the bottom of the socioeconomic ladder in California? Like, how does that make any sense? Like, why are these social safety net programs so big? Like, why in the world are we providing free everything, especially to people who don't pay into the system? That doesn't really make any sense to me. And so it looks like with all of that fraud that's being uncovered in Minnesota, I think California is going to put that fraud to shame in terms of size. I think it's going to be just epic scale fraud in California. And so what happens when that starts to come out and it starts to become clear that there's 50 or $100 billion a year of fraud. Maybe not that big, but some ridiculously large number. Trump is going to have no choice but to take action, maybe. And so if he cuts those transfer payments, well, all of a sudden, most of those services go away, because in California, the state can borrow to build the capital infrastructure, but it doesn't have any money to deliver the services, the actual delivery of the services, paying doctors and nurses their salaries, paying to buy all of the goods in the clinics and hospitals that are used to deliver those services. That's all federal money that pays for that stuff. If those transfer payments stop, then the state of California becomes bankrupt overnight, literally overnight. There's like a 30-day rainy day fund. That's about how long it would last, about a month. So all of the people who depend on these benefits, if those transfer payments stop, the people don't just vanish. They still need food stamps to be able to buy food or whatever it is. I think that could cause some serious unrest in California. But man, it doesn't have to be this way, though. It just doesn't. Like, we could get our fiscal house in order, but it just doesn't look like the political will exists to do it unless there is some type of shock. And that shock, I think, will probably be a spike in yields, which will make the stock market fall off a cliff. And then what's the Fed's response? Print more, make the problem worse.
Yeah.
Mm-hmm.
Yeah.
Well, it seems like it's their solution for everything. So Taylor, I mean, what's your take on what David's talking about?
So, I mean, Texas, we do a very good job. I mean, we underfund some things that we actually do need to fund. Like there's people
Like
with intellectual disabilities. Well, yeah, power grid, but like kids with Downs or autistic children, we do nothing for them in this state. We don't fund anything. And those are the people that you would go, well, those are the people we do want to help because they're the people, but we spend a lot more money on people with emotional disabilities than we do people with actual disabilities that they really can't work. But just to put it kind of in perspective, per resident per year in California, they spend about $5,000. You have to pay $5,000 in to pay for HHSC in California. It's half that.
You're breaking up a little bit.
Oh, can you not hear me when I'm going? So basically, the cost is half in Texas that we spend per resident on HHSC, mainly because we do underfund certain things, but we are very aggressive in weeding out fraud. Mm-hmm. There's not ways to make money in Texas off of HHSC. Actually, we can't get providers to do a lot of the things that we need because they just don't pay enough. So that being said, like we do have to fund certain things and do things a little bit better. But at the end of the day, it's the same. It's supposed to be the same program run under the same federal laws, but why is there double the cost in California? And
because of the fraud.
Yeah, and
the short answer.
There's a lot of people getting on that shouldn't be. Plus, the problem is when you have something like that, you get people stuck in perpetual cycles of poverty because the reality is
multi-generational welfare, where the single mom has kids and they have kids and they get on welfare and, so on and so forth.
Because you're actually incentivized not to work.
Yeah. Sorry, go ahead.
What are they called? The Semitic Jews, the ones that wear the hats and the things. They had a big thing. There's a big thing where a guy went around, I guess in northern New York, all of them are on welfare. And
they own the whole neighborhood.
Yeah, I saw that. Yeah.
Yeah. And so it was one of these things. I mean, that's done through a lot of religious cults though, like Mormon polygamous cults were doing it for a long time until they got broken up. And it's kind of a sick and disgusting thing that religions do that, but it's this problem but it's done through different things. Like there's this generational society where people won't get married because they want to have kids and they want to get all their kids on, whatever government subsidies they can. But if they get married and the husband lives at the home, they can't. So he lives somewhere else, and all of his kids and everybody are on welfare. And well, eventually that system breaks apart. In contrast to that, where people who actually do need help, like kids with Down syndrome or severely autistic kids, they don't fund those programs because they're not vocal. They're such a small portion of our society that they can't speak up. Or even in Texas, I do a lot of Medicaid planning for people, and people can't get on Medicaid that need it until they're completely impoverished. So you have this problem where, we keep creating these programs to try to help out, but really, are they helping? And so,
well, and I guess the bigger question would be as well is that the government's place to be doing those things, or should it be at the federal government, I should say? Because, and I don't know, in my experience working in the government, is usually the most effective use of resources is at the lowest level possible. So we got about 5 minutes left. I want to go around the horn and just kind of do closing thoughts like I always do. But
can I go first because I got to jump to something?
Yeah, go ahead.
All right. Yeah. So we went over a bunch of things, and yes, we have serious problems here in America and that need to be addressed. And I think everybody's kind of hit it on the head, which is it's total irresponsibility of the government with finances. And that ultimately is usually what causes the downfall of a society. All right, guys. And I got to jump.
All right. I'll talk to you later, man.
See ya.
All right, Jeff. Closing
so,
thought.
Well, I do agree that the canary in the coal mine is going to be the market, and I do think what's going to choke the canary is going to be rate and or currency related, which is, I mean, they're two sides of the same coin basically. I do want to share my screen on one thing that I wanted to show you.
All right.
If you give me that thing, because this is because I spend most of my days trying to build now. I use a lot of structured products. I use a lot of hedge strategies because I'm just very worried about.
Yeah.
I mean,
share your screen.
Okay. How do I do it? How do I do it?
The same way you always do. The middle bottom.
Hold on. There we go. Got it. So here's what I want you to see. My big concern is losing money hurts a hell of a lot more than making money helps, and so I'm very defensive right now. But I want to be opportunistically defensive, which means I'm using things like structured products and hedging strategies and other stuff. But this is something that JP Morgan put out like a week ago. All right. So the data is as of December 31st, 2025.
It looks like my target at the range.
So it's a scatter plot. So here's what you need to know. And this is not a timing tool, but I think it's very interesting. So the green line is the forward PE ratio in the so it's the estimated S&P 500 forward PE ratio, which means basically you take all the investment banks, you look at what they think the market's going to end up at, what they think the S&P 500 is going to earn in the aggregate, what do you think it's going to cost in the aggregate to buy the S&P, and so it's a 12-month projection, right? And when we're at this green line is where we're at. So we're basically about a 22 times earnings right now, right? So again, this is the forward PE ratio is the price to 12-month forward earnings, okay? So when you see this line in history, these little squares, and we'll count, if it's touching the line, I'm counting it, right? So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. So about 20 or so, and there's a decent amount that's similar, maybe 15 below. So about 20 times in history, we've been at this level, and the subsequent return was anywhere from, 2-3% to like 40% over a 1 year period of time. And about half the time, or maybe 2/3 of the time, the market also had a negative year, right? So it's a very kind of coin flip kind of outcome. But when you take the same market valuation level and you plot the subsequent 10-year returns using history, look at this nice line, right? When the market's at a, when you can buy.
We're going back to trend lines that David was teaching about in the last episode.
Bam, right? So the bottom line is this: if you're like just to give you an idea, the market was about this. It was about a 7 or 8x on the Dow Jones in 1981, right? So in general speaking, if you can move this green line far to the left and you say, oh, the market's really cheap, your subsequent 10-year returns are always, according to history, between 10 and 20% annualized. Okay. Conversely, if you go back in history and you look at times where the market's this valued, your subsequent 10-year returns are always about 1% to negative slightly on an annualized basis. There's never been a time in history we've been this highly valued and we haven't paid a price over the subsequent 10 years. And the thing that I want people to take away from that is not that the market's going to go sideways for the next 10 years. Think about 2000, right? The market was here. It cratered 55% to the bottom of 2002. It recovered nicely to 2008. It had a wonderfully gigantic kick up, went down 51%, and then it recovered 26% through the end of 2009. But if you had put your money in 2000, went to the moon, and came back a decade later, you lost about 91% of your initial investment if you include dividends. If you don't include dividends, let's say you were in aggressive stocks that don't have dividends or growth stocks, you went from about 100 grand to about 78 grand. Okay. Now, that is in spite of the fact that 6 out of the 10 years, the market was up. So if you think like baseball, the best hitter of all time, I think, is Ty Cobb, and he had like a 414 batting average, right? So 6 out of 10 times he was missing he was getting struck out. Here, 6 out of 10 times the market went up, and it was still the worst decade since the Great Depression, because the years where the markets went down, you went down so much more than the up years helped you, the down years hurt you, right? We've all been to Vegas. We've all bet, you got your $100, you bet, don't bet $50 on blackjack, but you bet $50 on blackjack and you lose, you got $50 left out of your initial 100. You got to double your money now to get back where you were, right? You lost half, you got to double to get back. And that compounding math sucks. So here's what you have to do. You better have a strategy or strategies to mitigate, hedge, guarantee, whatever you want to do, some combination thereof, so that when we have a coming drawdown, because it's coming, you don't lose dollar for dollar. Maybe you lose 20 cents on the dollar, 30 cents on the dollar, 50 cents on the dollar, whatever it is. You need to have a strategy beyond pure market diversification to make sure that you got dry powder for the subsequent years to come, because the market doesn't go sideways. It's not this, right?
Well, and we'll get into some of those strategies on some of the future shows.
Yeah. So I just want people to know that's my big concern is this ugly ass portion of the graph right here, because I got people to retire and I can't do it if the market goes down.
Well, I know David's got to get going. So David, closing thoughts.
I actually, so the time zone changed, Mike, because I'm living here in Florida now. I've actually got, quite a bit more time until my call. So I've got another hour. Yeah. So this is a great chart. Now there's a couple of things that I want to just point out though. This probably doesn't take into account quantitative easing at all. I think that the era post 2008, 2009 is just different. Period. Like it's just different, because now you've got the Fed, which will step in at any sign of weakness. And I just kind of think to myself that, there could be a non-zero likelihood of a blow off top, like a real 1998, 1999 style blow off top. That starts,
it could go to the moon before this happens, for sure.
Right. Yeah. And you usually don't see markets crash when we expect earnings to grow at, double digits this year.
That's true.
So I don't really expect a crash unless something really horrible happens in the bond market. And even then, I would expect the Fed to step in immediately and just print. So, maybe what happens here is we get just another phenomenal year. And
absolutely. And look, the math is actually in that favor, right? Over a 1-year dispersion. But this is over 10 years, right? So the two things I want to comment on that, because I actually have to go as well, but I want to comment on that, and you guys can party like rock stars for the next hour, is I completely agree that we are in a world of financial repression and manipulation unlike before, right? We have basically broken all boundaries of free market, and you're absolutely right, they would step in and print. However, my concern of defensiveness, opportunistic defensiveness. So for example, I want my clients are structured in ways where if the market goes up, they still participate in most of those gains. However, what I'm really worried about is twofold. One, I do think that you're absolutely right. The Fed steps in. But my thesis is at some point, like you discussed earlier in the show, if rates really push high, if it really breaks on, Japan maybe is the canary in the coal mine, something breaks at a global level, the Fed won't have that they will be neutered in that ability.
Because if they step in and print, it would just exacerbate the rates problem.
Correct.
Yeah.
So I think the difference between now, or the future crisis or difference between now and then, is there is at least a significant probability of a scenario where printing is just pouring gasoline on the fire. Right. And then we're going to have this weird scenario of, well, which way do you go, Western man? Right? Do you print and see, and at least it looks like you're doing something, and maybe you completely now we get into hyperinflation or some other crazy situations going on, or do we take our medicine and reset some of these asset values? So that's my prime. But I want to say one more thing to make sure, because David is 100% correct on this. Quite frankly, if you pull this green line back about just to 20x, right? We've been at 20x using forward earnings since about 2017, 2018. So like, it can be at these very elevated levels and still very much grow for a very long period of time. That's why this is not a timing metric, but it is concerning that we don't have a 10-year window in history from a valuation at the point we're at that looks pretty. So I'm just going to say that in my personal opinion, the easy money in this last bull market has been made. As far as making the money without really worrying about it. Like, so the market might go up 30% this year, but it's going to be a stressful 30. I'm just telling you, right? Yeah. And if it doesn't, well, hey, you know what? You've been prepared. With that, guys, I really appreciate it. Love talking with you, David. Thanks so much, Mike. And I'll catch you guys next time.
Sounds great.
See ya.
Take care, brother.
Bye-bye.
All right. Well,
that was fun, man. That was a great time.
Man, why does it keep doing that? Hold on one sec. There we go. Yeah, no, it's and you're welcome anytime, brother. It's we do that every Monday. So, if you want to just flow, from our show straight into this, we can.
I think it's awesome, man. Yeah. Those guys are great.
Very knowledgeable. Like I said, that's kind of, what we're trying to build here, with you and with Jake and with Taylor and Jeff and, the other Jeff and, everybody else, Colin that, comes on the show, and Malik, and everyone has their, and this will be my closing thoughts. Everyone has kind of their specialty. They're a subject matter expert in something. For you, it's DeFi, traditional finance, charts, things like that. Taylor, it's law, it's real estate. With Jeff, obviously traditional markets. The other Jeff, it's airdrops. With Colin, he's was one of the original people, I believe, one of the founders at Avalanche. So he has a deep understanding about a lot of these projects and, kind of how they started and, what occurred, kind of in the early crypto years. And of course, there's, me, I'm just kind of chronicling my journey, and I'm just, I'm decent at finding interesting people like all of you and putting them all together in one place and poking the bear and, letting you guys, talk it out. So, exactly. Nice little mix of topics. And that's what it's about, is just trying to create good quality content from people who actually know what they're talking about. Not just,
you see the guy in the chat? Look at that name, dude. The Flying Retardican.
Yeah.
That's funny.
Yeah. David gives a very common, clear explanation to everything, and it is very easy to digest as a viewer. And that's what we're trying to do here, is take complex topics and make it to where it's, we can, and I don't mean this, calling anybody dumb, but dumb it down so people like myself can understand it. Not everybody is a subject matter expert in DeFi or TradFi, and, not everybody understands what impermanent loss is, or, what hedging is, or, the CPI, or, it's so hard to learn all this stuff on your own, that it's great to have channels like this to where, and we're not incentivized to do it. It's not like we're shilling stuff here. We're not trying to sell you programs or anything. David's DeFi University, 100% free. Everything we do on this channel, 100% free. There is no reason for you to not be able to learn this stuff. And David's DeFi University, I'll actually show it real quick. it's a structured course. I mean, it isn't just a string of videos that you watch. There's course material, there's quizzes. Let me bring it up. And and then we got Jake Call, with Metrics Finance, where there is a DeFi portfolio tracking tool and simulator, and he's always adding new stuff to that. There is free versions of all of this. So we're not here trying to promote, you to pay us money. We're here to give you the tools to change your financial future, to understand, what makes the markets move so that, you can improve your life. There are, kind of additional things like, you can pay $97 a month and get on the live calls twice a day with David and the community, where they, have a question and answer sessions to where, you can ask questions directly to David and the rest of the community and get those answered. Very valuable. And for $97 a month, I mean, come on. But you don't have to do any of that. That's just when you want to take it to the next level. So anyway, I just wanted to throw that out there. But thank you, David, as always.
Absolutely.
Thank you. And we'll see you tomorrow at 9 a.m. my time and noon your time.
That's right.
So till then.
Awesome. Thanks, you guys.
Veteran
Peace.
Crypto out.